All right. Welcome everyone. It is 7:30, Monday, June 30th. We have a lot to discuss. Welcome to lesson 2 of your path to financial independence. This lesson is called Managing Expenses and Saving for the Future. We're going to go ahead and get started because this session is a little longer than the first one. The first one was 90 minutes long. Now, if you haven't yet gone over lesson 1, I suggest that you stop the viewing of this lesson and go back to lesson 1. There should have been a recording of lesson 1. So please back up a little bit. You might get a little lost today, and you might have some concepts that you need from lesson 1 in order to understand the concepts that we'll go over in lesson 2. Well, we have a lot to go over, and I want to go ahead and get started. So without further ado, let me go ahead and start sharing my screen, and you should start to see the slides that I'll be presenting. Also, I want to note if you have any questions in regards to what I'm discussing, anything in regards to what we'll be doing today, just go ahead and use the Q&A. The Q&A is in the section on the side of your screen. And you'll also, if you can't use the Q&A, I know last time there was a few folks that couldn't use the Q&A, make sure that you're using the chat box as well. So you can use either the Q&A or the chat box to ensure that your questions are being answered. I get to see the little prompt. Today we're going to do things a little bit differently. The good thing about today is that it's a lot more interactive. It's not just me lecturing and talking about money. It's also me asking you questions in regards to some of the things that you might have learned, some of the things that you might do. It's a lot more activity driven. Just to remind you, I do have 8 lessons that I'll be going over in regards to finance. We are in lesson 2, managing expenses and saving for the future. Lesson 3 is actually the cash flow game. I'll talk a little bit about that a little bit later. And then after the cash flow game, we start really talking about investments. I suggest that if you still struggle with managing your expenses, budgeting for yourself, or savings, that you don't go beyond any of the other lessons after the cash flow game, because it's going to be very difficult for you to get the whole concepts of investments when you don't really know how to handle your own finances. So that can be a little dangerous. Regardless, here's lesson 2, managing expenses and saving for the future. We have a lot to discuss, as I mentioned. Let's go over the objectives for today. We have 5 objectives for today. First one is to discuss financial goals and why they're crucial to money management. The second objective is to discuss what a budget is and why it's important. We'll discuss monthly and yearly personal income statements as well. I'll talk about how credit really works. I get a lot of questions in regards to credit. Should I pay off all my debt at once? I want to touch on that point a bit later, and also just understand the different ways to save money. What I'm really trying to create in the first 3 lessons is a platform, the fundamentals for you to know how to manage your money well, or a lot better, so that way you can begin to invest in the near future. A lot of folks think that making more money is the way to go. Making more money will solve all of their problems. That's not necessarily true. It's really just managing your expenses a lot better. All right, so I hope you guys know who this guy is. Michael Jackson had a song, I think it was called Do You Remember the Time? I really don't even remember. But he did have a song called Do You Remember the Time? At least he said it in the song. I want to pause for a bit, maybe take a few minutes, and I want to ask everyone in the audience, if you're watching right now, to go ahead and write down either on the Q&A or on the chat box if you remember the items that we discussed on lesson 1. In fact, you should just write down something maybe that you got out of lesson one, something that might have resonated with you. Um, anything of that sort, you go ahead and please write it down. So we'll take maybe a few minutes. I'll go ahead and stop sharing my screen so that I can see if anybody's actually writing anything. And there's a few folks that I know are also that are online on their phone. You can go ahead and use it on your phone as well. So if there's any questions or anything, go ahead and just write down anything that you might have learned from lesson one. And again, I see someone's just joined us. If you've just joined us, we just got started. We haven't gone too far from the lesson. Please make sure that if you joined us, you've already gone through lesson one. Right now, you're in lesson two of your path to financial independence. So right now, I'm just asking everyone to write down anything that you took from lesson one. And I'll give everyone a few more minutes to respond. You could respond either in the chat box or in the Q&A section. All right, I give a few more minutes. Okay, so I have the first comment. One of them is just talking about the rat race. Yes, that's a huge component. I'm actually going to be discussing that again today, so that's really important. Let's see if anybody else responds or adds anything. Okay, well, I do have a comment. Remember the Time is the name of the song, so thank you for uh, uh, supporting my question. So thank you for answering my question. Let's see if anybody else writes down either on the chat box or on the Q&A anything else that they might have learned from lesson one. Okay, I don't see anything else, so I'll just go ahead and continue. If anything, I'll come back later and see if there's anything that that you might have written there. Okay, so let's go back to Michael Jackson. So yes, do you remember the time? Again, these lessons are built for you, just for you to understand the fundamentals on money management. We're going to be going through a lot today. If you believe that you're falling a little bit behind, if I'm going too fast, please just let me know, okay? Okay, and I do see somebody else write something. The rich dad, poor dad concept. Good, just a refresher. Perfect. All right. So financial goals. I'm going to give you a quick story about Abel. So Abel is, again, one of my characters that I make up all the time, just like I did on lesson one. Now, Abel, this is Abel here. I hope you can see Abel. He looks like a cartoon, has a little mole by his nose. Abel was a person that didn't necessarily go to school, but he began to work a lot. He got a job at a factory, just working part-time, working working really hard. Abel is a hard worker, and little by little, he started moving up the ladder in this company. In the factory, he now was making a little bit more money, and at the same time, he was moving up the ladder. And this took a few years, but Abel was moving up the ladder, making a little bit more money. And again, you can definitely relate maybe your story to Abel's story as well. So as Abel's making a lot more money, he's at the same time also wants to reward himself. So with more money comes more expenses. Get a nicer car, maybe get a nicer apartment, start getting some credit cards that you think you can just pay off. You start to buy things you haven't necessarily bought in the past. You get a nice big screen TV, and you got some nicer clothes. In fact, if you look at Abel right now, he went from a cartoon to a human. That's how great Abel has it. So Abel's just doing an amazing job at his work. He's earning more money. But at the same time, if you remember what we discussed in lesson one, this becomes a little bit dangerous. As you start to spend more money, as you start to get yourself in debt, you also begin to get yourself in the rat race. And this is a very common story. The able story could be a story about you, it could be a story about someone that you know, but this is a very common story. We work hard, we start to make a little bit more money, we start to buy things that we like, we get in the rat race. And now we're trying to work even harder, trying to earn even more money so we can get out of the rat race. So this is extremely important to understand the rat race, because it's not only something that we'll be covering in lesson 3, which is the cash flow game, but it's also very important because we might be in that trap right now, and that's maybe why we're taking these lessons. So last time I spoke about how we get into the rat race, and I gave some quick examples. I wanted to come back not to those examples, but some other ways that we can actually get into the rat race because of our own fault. So it's not maybe because we're spending a lot of money or because we bought a house, but a lot of times those might not even be the issues. The issues could potentially be the following. The first one, there's no or little financial tracking. We're not looking at our numbers. We're not looking at what we're spending our money. We're not looking where our money is going. We have no idea what we're doing with our money. So that's one issue that can get us into the rat race. The second one is no or few life goals or plans. Most people are just working for the heck of it. Some might be maybe making ends meet. Some of them are trying to move up the ladder. But when you have no plans as to what you're trying to accomplish in life, you begin to just spend money. You just spend money. You just spend money. And that becomes a huge problem and leads to the next item that I have here, which is no or few financial goals. So if you have no goals at all, not even a trip, maybe you want to go to Europe, maybe you want to do certain things, those are goals. But if you have absolutely nothing that you can think of things that you want to do with your money, all you're going to do is spend the money that you do have. And that becomes a problem, and that's how we actually start getting into the rat race as well. So these 3 things are very crucial in getting into the rat race. No or little financial tracking, no life goals, or no financial goals, or few of them. So these are very, very dangerous. I recommend that we do use some type of tools. If you're using an Excel sheet, that's great. If you're using Mint.com, which I highly recommend, I really think that's a great tool for you to be able to track your expenses. However, there's a difference between having a membership with Mint.com or a few other programs that might be out there, and there's a difference between that and you actually looking at the numbers. So you might have a Mint.com account, and that thing is updated all the time, but if you only look at those numbers once a year or once a month, you will be very shocked as to what your money is going. The key of these programs, the key of tracking your expenses is to know where your money is going so that you can create budget, so that you can figure out where you do want your money to be spent. Okay? So these are the reasons why we begin to spend money with no controls. At the same time, I feel as though there are 4 different types of people. You might fall under maybe one of these categories. The first one that you see here is a person who has all these great ideas, and that's where you see the light bulb. Great ideas, so many things they want to do. They want to do that, they want to do this, they want to travel, they want to open up 3 different businesses. Then they have the next week a different idea of what they want to do. Now they want to become a teacher and teach music for a living. Just so many ideas. However, there's no action put in play. So this is just a person that has all these ideas. They talk about all the things they want to do, but nothing actually happens. Then you also have a person that might have a lot of ambition. Maybe they have plans. Maybe they've had plans for many, many years. Plans of what they wanted to do, where they wanted to work, but they have no action plan. And that becomes a problem. You could potentially have these great thoughts and a huge ambition, but if you have no strategy as to how to get to where you want to be, that becomes a problem. And again, that is typically when you're moving just up the ladder, just working hard, but there's no plan set in motion. Then you have the people that are doers. These are the people that are most commonly categorized as successful. They're determined, they go and do the work, and they want to go ahead and be successful. They have the goals that they want to set for themselves, and they want to make sure that they accomplish those goals. And then finally, you have a fourth type of person, and this is just a person that they might just not know what they want. Now, you might be the ambitious person, you might be the clueless person with just so many ideas, you might even be the person that has a lot of you're a doer. The reason why I'm bringing these things up is because these are tightly aligned to our financial goals. And a lot of times, maybe throughout our lives, maybe we fall into one of these categories. Maybe at one point, we are just a person with all these great ideas, and all of a sudden, we have resources and we become doers. Or there could be a point where I maybe don't know what I want to do, and then eventually I start getting some ambition, I get more motivation, and I start moving through some of these categories myself. So, the reason why I bring this up is because it doesn't necessarily matter where you currently are. Just because you might be in one category does not mean you're going to stay there. But my question to you, and this is a section, as I mentioned earlier today, it's going to be a lot more interactive today. I want to ask you, what 2 to 3 personal goals would you like to accomplish before you die? Now, notice I did not say what 2 to 3 financial goals, how much money you want to make. That's not the question. I just want to know 2 to 3 personal goals that you would like to accomplish before you die. This is where I want to take a few minutes, maybe 3 to 5 minutes. There's not too many people currently viewing this session, so I don't think this will take that long. But just take a few minutes. We're going to take maybe about 5 minutes. You can write this down if you don't want to share it online so everybody can see. You can just write this down in one of your notebooks if you're taking notes, or you can just put it in the chat or the Q&A. But I do want to take 5 minutes for you to think about this, and then I'm gonna ask a few folks to maybe volunteer and share something that they might have come up with. So let's go ahead and pause momentarily. Remember, I want you to write 2 to 3 goals that you want to accomplish before you die. Okay, so if you're just joining us right now, it's one of the interactive sessions that I have. I'll put the question, yes, I'll go ahead and put the question up again so that everybody can see. In the meantime, I'm going to put myself on mute. That way you can think and I'm not talking in the background. After you write down your goals, we're going to talk about it a little bit, maybe share a few of them, okay? So I'm going to go ahead and put myself on mute, and I'm going to put the question up once again, and we'll take probably about 4 minutes now, okay? All right. So welcome back. If you're just joining us, we recently did an activity. I asked a question, what 2 to 3 personal goals would you like to achieve before you die? So I'm going to go ahead and ask that question, maybe start a little bit of a discussion. If anybody would like to write down maybe at least one goal that they have that they want to accomplish before they die, go ahead and use it on the Q&A or on the chat box, and maybe we can get a little bit of a discussion going on before we continue into the next section. So go ahead and just write it out. And we can definitely continue in a bit. All right, I see somebody just joined us as well. So if you're just joining us, we are about 20 minutes into our lesson today. We've just kind of covered a little bit about what we discussed before. We gave another story about a guy named Abel. We talked about some of the issues of why people begin to spend money, how they get into the rat race, and right now we're just talking about our life goals. Okay, well, I see only one comment. I guess just save for children to go to college. So that's a really good goal. I think that's great, and I'll take that. So thank you for those that are participating. I also want to encourage folks to think about something else. I know the question that I asked everyone was, what 2 to 3 goals would you like to accomplish before you die? I want you to think about changing that question a bit. Instead of asking before you die, I want you to replace that with before you turn 50. What 2 to 3 goals would you like to accomplish before you're 50? And if you want to go beyond that, what 2 to 3 goals would you like to accomplish before before you turn 40? These are really, really important questions to ask yourself, because a lot of times we think that these goals are beyond your reach and they are very, very far away, that you're not going to get there until maybe 20 to 30 years from now. You might be 30 right now. You're like, you know what, maybe when I'm 60, I'll get there. But that's not true. We can actually get there much sooner. And it all starts with just setting yourself a goal to accomplish maybe in the next 5 years, maybe in the next 2 years. Short-term goals, long-term goals are going to be extremely crucial for how you really handle your life. So don't think about these goals as something just far away. I want to make sure that we're thinking about this in the current term, in the present phase of our lives. Okay? No, don't worry. I won't ask you what goals you want to accomplish before you turn 40. But here's a few other questions that I want you to ask yourself as also. What is it going to take to make it happen? How much will it cost me? If you have these goals, if you say, hey, I want to go to Europe for 2 months on vacation, how much is it going to cost? That's how you start to create some financial goals. Maybe you want to go to the next World Cup in 4 years. How much is that going to cost you? How long will it take? Not only how long will your goal take, like if you want to do something in 4 years from now, but how long will it take you to save up that money or earn that money? That's something that you really want to consider. Maybe you want to go back to school. There's a lot of different goals that you might have. Start putting time frames, associate time with your goals. And the question that most people don't ask, that I actually think is the most important one, is this last one that I just see this last bullet point. What must I change in myself? Yes, what is it going to take? How much is it going to cost me? How long is it going to do? That is those are very, very important questions. But asking what must I change in myself, that's probably one of the most important questions that you'll need. Because if you think that you're not a person that can save money, or you just say, oh, I'm just not good at math, you already convinced yourself that you can go through some obstacles, and particularly with finances. So what must you change about yourself? It might be your mentality. It might be the way you think, because that would be your mentality. It might be the way you carry yourself. It might be your skill set. There's maybe certain things that you really need to redefine within yourself so that you can accomplish some of these goals. Maybe you're a negative person and you just think that you can't do certain things. Maybe you just think, oh, there's no way I'm going to get rich. It's too hard. You're already putting yourself down. So the main question you should ask yourself is, what must I change in myself? And then try to take proactive measures to change that. I also put a different question here. The last question I have here is, who will help me? Sometimes we just don't even ask this question. We're trying to take everything on our own. We're reading books. We're trying to do this. We're trying to do that. But there's always someone that can help. There is always someone that you can learn from, and there is always someone who is willing to guide you or teach you. You might have just not asked a question and said, hey, so-and-so, can you help me? Hey, how did you do this? Can I learn from you? There's always somebody that can help. Maybe you need a little bit of money because of you're trying to pay some debt to increase your cash flow, whatever the case might be. I don't know. Have you asked anybody to help you? That's an extremely important question. Most successful people, if you read any biographies from Steve Jobs to Abraham Lincoln to anybody, you'll notice that in their biography they write that they did not become successful alone. They always had someone that helped them in one way or another. Okay? So these questions are extremely, extremely important, and hopefully I started to make your brain work a little bit more. All right. Let's talk about budgets. Now, the interesting thing about budgets is every time I bring up budgets, every time I try to work with someone in finance and working with their finances or personal finances or their business finances, and I talk about budgets, you kind of get this little sound coming out of someone. And the reason it comes out is because, and I get this, people tell me this a lot. They say, oh, you just want to put me on a budget because you don't want me to spend my money. You want me to stop having me buy Starbucks or having me stop going to get fast food. Whatever the case might be, budgets to me are extremely important. And contrary to the way you think, contrary to the budget is for you to cut on your expenses, that is not necessarily what a budget is. What a budget really is a system for you to decide where to allocate your money properly. And then if you see that you're not allocating your money properly, then start to make cuts in that manner. So for example, if I have all these things that I'm spending my money on, but I feel that there's one item that's extremely important to me. It might be paying off my student loan. And I'm trying to decide between how I spend my money. And I'm paying off that. I'm paying off a few more bills. But I also like buying my shoes. I also like buying my movies. I like going to listen to live music. There's a lot of things that I'm doing. And eventually I'm spending more than what I'm making. That's when it becomes an issue. So my question to you is, where do you want to allocate your money, or where do you need to allocate your money? It's not necessarily, hey, let's just cut your spending completely. It's no, where do you want to allocate your money? And then we figure out with what's left, where should we allocate it? And that is typically when we begin to make some cuts. So that's really what a budget is, and I'm going to bring back an example from lesson 1. If you guys remember, I compared two people, Alex, who does quality control, and Daisy, who is the VP of accounting. I'm bringing back this example because I believe it's one of the examples that kind of got to a lot of people. And a lot of this goes back to budgeting. We might be doing a budget, we might not, but the more detailed we do our budget, the better. The reason why I can show you this example here that you're seeing, this is the same one from lesson 1, is because according to Alex, according to Daisy, maybe they are tracking their expenses, and this is how much they're spending per line item. My question to you is, do you know how much you're spending per line item? Do you know how much you're spending on food, on clothes, on maybe your car payment? Do you know how much you're spending on entertainment and going out? Maybe how much you're spending on your kids. These are all valid questions, and my question to you is, do you know these numbers? These are very, very important because if you start to do this math, if you look at this on a monthly basis and you start to look at your cash flow and you're like, hey, at the end of the month, yes, I'm making $502, or oh my God, at the end of the month, I'm actually always negative 130, you then start to find out that you either have wealth, you're creating wealth, or you're stuck in the rat race. These are very important concepts, and I brought them back into this lesson because it's something that we have to figure out right now. When we start to play the game cash flow in lesson 3, this is one of the biggest discussions that we have. We discuss how we can get out of the rat race by having our cash flow be higher than the money that we spend. So again, are we accumulating wealth or are we stuck in the rat race? This is an important concept, and this is really where budgets come into play. So if you haven't done this already, you should start a mint.com account, maybe use your Wells Fargo online banking account or Bank of America online banking account. If you're using a spreadsheet, you need to know where your money's going before you continue with anything else. July is about to start tomorrow. You might want to do your expenses maybe for June and figure out where your money went and start creating a budget for July. It's not too late. We're just barely starting July tomorrow. But past lesson 3, I wouldn't suggest for us to continue with other lessons if you don't have this locked down yet. Now, if again, I asked a question to yourself, hey, is there anyone that can help me? If you remember that was one of the questions that I listed in the last part. I'm more than willing to help you out if maybe getting a hold of your personal finance together is something of a goal of yours. Let me know. We can work something out. I have so far, I believe it's about 7 people that I meet with every single month to go over their personal finances. I don't charge anyone. Again, I'm only inviting friends and family to this webinar, so I'm not charging anyone. If you just maybe want me to just take a look at what you're doing, that's fine too. But the key is to have this locked down. You have to have a system. You have to have a budget. Okay? A few tips to manage your budget. Plan everything and add a dollar sign. If you do this, trust me, you won't not only just save a lot of money, but you also won't spend as much. You want to ask yourself, what is important to you? For example, in my budget, I have a budget allocated for concerts and shows. I love music. I'm a musician, so I'm always at shows, at least once a month. So I always ask myself, okay, how much money am I going to allocate a month for these things that I really, really need, for these things that I really, really love? That is something that is important to me. And I can't remember how much I've allocated, but I believe it's about $200 a month that I've allocated on going to concerts. Again, it's +1 obviously, but you never know. That's something that is really important to me. Another thing you want to consider are celebrations, birthdays, baby showers, Christmas. This is something that we don't think about. We can probably spend like crazy for someone's birthday. Ask yourself, hey, in July, whose birthday is coming up? Especially if you're going to buy a present, obviously, but this is something that I allocate in my budget every single month. For my budget in July, I know that there are 2 birthdays in July. I think it's 2 birthdays. There's 2 birthdays in July. I typically buy a present. So for those 2 birthdays, I'm going to allocate a budget, I don't know, maybe about $20 each, so maybe $40 total to spend on presents. It's the same thing with baby showers. Maybe you got invited to a baby shower in July. Maybe for a gift, you might want to allocate a budget for that. And for Christmas, it's actually very, very crucial. And any holiday that you might want to celebrate. Maybe you love Halloween and you love spending money on costumes. You want to allocate a budget for that. Maybe you love buying presents on Christmas or going all out on Christmas and buying a Christmas tree and doing all these things. You want to allocate a budget for every single thing that you celebrate at the beginning of every month. A few other tips. You want to plan trips, particularly vacations. If you're planning to go in on Mexico for the summer for maybe 3 weeks or a month, you want to put that in a budget. How much are you going to spend on airfare? How much are you going to spend on food? How much are you going to spend on a hotel? Maybe you're staying with some family, so you're not going to spend anything on a hotel. Maybe you want to get a rental car. All these things you should be planning. You should be researching how much all of these things cost you so that you can allocate an appropriate budget for your vacation. What typically gets to people are those unexpected vacations. Going to Vegas during the weekend, maybe going to Big Bear during the winter, whatever the case might be. The trips can actually eat us alive. So even if it's a random trip, somebody invited you for the weekend, hey, allocate a budget very quickly, see if you can actually afford it before you decide, but you want to allocate a budget for this, okay? There's also something that I do. I allocate a budget for bigger purchases as well. So for example, for buying a vacuum or a blender, I actually allocated a budget. Even when I got the phone from my girlfriend, I allocated a budget for it because it was about, I don't know, $250 or something like that. For big purchase items, you want to allocate a budget and not buy it all at once. So maybe you want to buy all these things. Maybe you just moved into an apartment and you want to buy a new TV. Oh, you need a blender and you need a vacuum. Oh, you also need a trash can because the old one you left at the old apartment. You have 4 items that you want to buy. You want to pace yourself a little bit. If you can buy them all at once because you allocated a budget to buy them all at once, then be my guest. But if you didn't, if that's not the way you work, and if you do that, it's going to make you spend more than what you make, then you might want to do what I do, which is just allocate a little bit in your budget to purchase an item every month. So maybe in the month of July, you buy the vacuum. Maybe in the month of August, you buy the blender. Maybe in the month of September, you buy the trash can. However you want to work it out, you want to allocate a budget and budget appropriately for these big purchase items. This is also the biggest issue that I see when people don't manage their budget well or how they get in the rat race. They're just buying and buying. They bought a big TV they didn't plan for. They might be making payments they don't know. Now they're making payments every month. Again, you get into a lot of trouble when you start to do that. So what you do? You want to plan to purchase these big items. Other thing to consider, school. Maybe you want to go back to school. You might, and you're not getting a free ride. You might want to consider what that's going to cost you. If you're trying to get your MBA, that's going to be about 60 grand. You might want to consider, hey, is that something I really want to do, or how am I going to be paying for that? Gym membership as well. Maybe you're trying to get a family plan. You get your boyfriend in there and your family or whatever. How much is that going to cost you a month? What are you allocating a month to committing to something? Maybe you want to put your kids in Pee Wee football. That's something to consider too. The uniform, the oranges that you got to buy the kids every week. All those things you definitely want to consider, okay? So these are just some tips for you to manage your budget. Just plan everything and anything accordingly. I'll go through questions a little bit later. So if you do have questions, I'll address them a little bit later. Oh, and Mario, sorry, I just got your message about your life goal. I think it's a great goal to learn martial arts in other countries around the world. I'm not sure if that was just meant for me to read, but that's an awesome goal. That's an awesome goal. All right. One last thing that I definitely want to point out in regards to budget is to try to plan for emergencies as well. I actually have in my budget, I have a certain dollar amount. I believe it's about $100 to service and parts. This is really for my car. in case my car breaks down, in case I got to do an oil change. I allocate a certain amount for my car every single month. Now, am I going to spend it all the time? Absolutely not. I don't spend $100 on my car for maintenance all the time, but it's good to know that in case of an emergency, I don't have to worry because I've already allocated a budget for it. Same thing with the doctor, same thing if going to the dentist, it's the same thing. Okay? And then later we'll talk about savings. We'll talk about how you can then tap into your savings account because you have an emergency savings account to go to the doctor and not worry about how much it's going to cost you. Here's a few more tips, and if you can maybe just focus on the month of June first, we'll go over the rest in a bit. But this is just a typical sheet of an annual, or an example, I guess, of an annual budget. If you look at June, at the top it says $2,820. Let's say that's how much you're making a month. And for rent, you pay $900. Then you see the breakdown in your car. For car payments, you pay $250. For gas, you spend about $300. For car insurance, you spend about $120. And again, maybe you'd want to do what I do and just put $100 for maintenance every month in there. For food, on fast food, you spend $100. For groceries, you spend $450. Then you have bills. You have your phone bill, $130, and you have a utility bill. Again, maybe it includes all your bills: electric bill, gas bill, water bill, and it's $120 total. And then you see that maybe you want to allocate a portion of your budget to go shopping. You just love shopping. So $100 will go to shopping. $150 will go to entertainment. Maybe you like playing video games and you like buying video games every month. You allocate a budget for it. And again, maybe you allocate a budget for gifts and presents, just for birthday parties, for example. So if you look at this, you have a budget here for June on what you're going to be spending your money on, and you don't have to worry anymore about, oh my God, am I going to have a lot of money at the end of the month, whatever the case might be, because you have a budget for it. Okay? So you don't feel guilty when you go shopping. You don't feel guilty if you spend anything on going to a concert or going to the movies because it's hitting your entertainment budget. You're actually okay. Let's look at July. So, I'm sorry, let me back up. I made a mistake. The $2,820, that's how much you're spending. I'm sorry. Yeah, if you add everything up, the $2,820 is how much you're spending. It's not how much you're making. We're just talking about budgets right now. We're not talking about income coming in. So for July, as you can see, we're spending a little bit more in July. We're spending $3,295. If you make a comparison between June and July, you'll notice there's a few key differences. And it's really towards the bottom where you see shopping. So typically we would allocate $100 for shopping. In July, we want to buy a vacuum and a TV. So we're planning ahead. Maybe we're about to get into July and we're planning ahead. So for vacuum, it's $95 and the TV is $480. And that's what I mean about planning in the future, planning your budget correctly. Because again, maybe in June you did your budget, you're not going to spend on those things because you just moved, but in July you're going to allocate a budget for it. Maybe you're expecting additional income, I don't know. Maybe you're reallocating your budget, I'm not sure, but you're now allocating a budget to get a vacuum and a TV. If you look at August, in August you're spending a little bit more, $4,820. And again, if you look at the breakdown, it looks more or less the same as the June and even July, with the exception of a part towards the bottom. I don't know if you guys see it, but vacation, it says for vacation you're going to spend $2,000. So everything's the same as the budget in June. The only difference is that there was a trip planned for August. And again, this is something that you should do maybe for the whole year or maybe every 6 months. I typically do it every 6 months. And then you see, that's a typo there, I'm sorry. You'll see something for September, and September goes probably around the same thing as June. The only difference is that there's $50 more. As you can see at the bottom, for gifts and presents. In June, it was $100. and what's supposed to be September, it's $150. So maybe there's a few more birthdays in September that you'll be experiencing. So you reallocate your budget appropriately. But again, the goal of the budget is to make sure you allocate the money the way that you want. Okay? All right, before I talk about credit, I'm going to pause quickly. I want to look at the Q&A. I want to look at the chat box. I just want to see if there are any questions from anyone before we move along. So, any questions? All right. So I do have some questions. Let me see here. So I see that one of the questions says, when you are making all of these budgets, how are you doing that? Are you creating separate bank accounts, money pockets, or just one big savings account? To answer that question, I personally create different accounts for my savings. So I have about maybe 4 or 5 different savings accounts. Now for my budgets though, I just use one system. I use Mint.com. Mint.com is great because since I have so many accounts, I have a total of about, I think, 8 or 9 different accounts. Since I have so many accounts, Mint.com actually links them all, and I can see everything for every single account in one cloud, in one program. So I highly recommend Mint.com because it's one of the few programs that can actually do that. So to answer your question, I just create one budget with my different accounts for the following month. At the end of the month, what I do is I look at how I did for maybe, for example, for June. Today I was looking at my June budget. I wanted to see if I was in the green, if I had positive cash flow. And then I start creating a budget for July. So I typically do my budget for the following week, the very first day on Mint.com. And I begin to allocate, just the way you saw, I begin to allocate a budget for entertainment. This month, I'm allocating a little bit less in some of my expenses, and I'm hoping to get a little additional income based on some investments that I do have. So I'm allocating my budget appropriately. My car also needs an oil change, so I'm going to be allocating that in my budget as well. Okay, so that's kind of how I develop my budgets. Again, for anyone out there, if you have trouble or if you want help, maybe creating a budget for yourself, I'll be more than happy to sit down with you. This week, I do have a lot of meetings. I have a lot of people that I'm meeting up with to create budgets. We can do it remotely too if you don't want to drive to my apartment, but feel free to just contact me and I'll work on a budget with you remotely. We could probably do a Google chat as well. So, and then the last part of the question it's I have different savings accounts for my goals. So, for example, when I wanted to go to Cancun, I created a savings account that I named Cancun, and as I was setting money aside every single month, I had a goal to, I think it was about 3 grand that I wanted to save up. So I was I can't remember how much money I was putting in that savings account, but that savings account was solely for my Cancun trip. When I wanted to buy a car, I wanted to save up, I believe, about 2,500 for a down payment. So I created a separate savings account. And you can do this on Capital One 360. I personally love Capital One 360 because you don't need to go to the bank. You can do everything online. You can create multiple accounts, and you can transfer from account to account, maybe from your Wells Fargo account to your Capital One 360 account for free. Whereas if you do it between Bank of America and Wells Fargo and you try to transfer money, they actually charge you. But I love Capital One 360. That's just my preference, though. But I do create multiple accounts based on my financial goals. So I hope I answered your question. Let me see if there are any other questions. Just a few comments. Okay. All right, well, let's continue. Let's talk about credit. So I'm just going to discuss how credit works. I get the question a lot, hey Alan, should I just pay off all my debt? Should I just pay off all my credit card? My answer is always it depends. I'm not going to say yes or no. I will typically say no for a certain reason that I'll explain a little bit later. But let me first explain how credit works. There's a few definitions you need to know, though. The first definition is principal. And I actually just saw that. This is also misspelled. I apologize for that. But the principal, all it is the amount that you borrowed. The principal is just the amount that you borrowed. So let me give you an example. Let's say you have a credit card that you just got accepted for, and the limit is $1,500. You go out, buy a TV. It costs you $750 at an 18% interest rate. My question to you is, what is your principal? Now remember, the principal is the amount that you borrowed. Yep. So your principal is $750. You didn't borrow $1,500. That's just the limit. That's how much you can actually use if you wanted to, but you're not using all of that. You only use $750 for the TV that you bought. So that is your principal, okay? Now let's talk about interest rate and annual percentage rate, or APR. This is very simple. It's just the percent you have to pay for borrowing money. Each credit card, each loan is different. They all have a percentage rate. So let's go back to the example. Let's say you have a credit card that you have a limit for, $1,500. Same example, you bought a TV, $750 at an 18% interest rate. All you do is multiply the $750 times the interest rate, which is 0.18, and that gives you $135. So what you have to pay for borrowing this money is $135. That is, again, that's just simple interest, okay? So I guess those are simple definitions, and these are concepts that I'm sure you know. So if you go back to this example, $750 is what you borrowed. Then you have to pay $135 because that's what you're going to accumulate in interest. So what you actually owe is $885. Now the key component to understand is the compound interest. This is what gets you. Yes, the interest rate is extremely important. If it's high, it can kill you. If it's low, it might not. But what can always kill you is the compound interest rate. And I'm going to give you guys some examples. This is just the interest rate that is calculated out of the total amount that you borrowed plus the interest rate. So I know it sounds confusing, but I am going to try to explain it in numbers and in simplistic terms. So let's talk about a TV. Let's say we bought a TV and we paid $500. I try to use basic numbers so that it's not difficult to calculate. We bought a TV for $500 at 10% interest rate. So again, I'll ask the same question. What is the principal? Right, $500. And then the interest rate, yep, $50. So if you multiply $500 times 10% or times 0.1 is 50. Add those two up, and that's how you come up with $550. So you owe $500 in your principal, the amount you borrowed, plus the $50 that it accumulated in interest. That gives you $550 that you actually owe now. So let's say that's month one. Month one, that's what you owe, and then you get into month two. In month two, the interest rate, the compound interest, is not calculated out of the $500 that you originally borrowed. The compound interest is actually calculated out of the $550 that you currently owe. That is how compound interest creates debt very, very quickly. And that is why it feels like you're paying off your debt forever, because this thing just keeps adding up. So now for month 2, instead of just only owing $550, you now are owing $550 plus $55. I hope that makes sense. Yeah, I'll go back. So month 1, you see it at the top, you only owed $550, but month 2, the interest rate is calculated out of the $550 that you now owe, and that just adds $55 extra that you owe. And again, I'm not going to answer the question yet. Hey, should I just pay off my debt all at once? I want to give the next example first before I talk about that. Let's talk about minimum payments. Yes, so compound interest is very, very dangerous. Now, minimum payments differ depending on your plan. Maybe you have credit cards that tell you that your minimum payment should be $25, depending on what you owe. You have to be very careful because all you might be paying is the compound interest and no principal. And I'll give you an example right now. Let's go back to the same example. $500 TV, 10% interest. So on month 1, you owe $550. And let's say that according to your bill, your monthly payment, your minimum monthly payment can be $25. Okay? So I owe $550 and I'm going to pay $25. I'm going to pay the minimum. I'm trying to earn credit. Right now I can only pay minimum. So now you owe $525 coming into the second month. So maybe you see where I'm coming from now, if you remember compound interest. Yep. So now the 10% is calculated out of the 525. So instead of owing 525, you now owe $52.50 more. Yep, does that make sense? So again, minimum payments that you want to make, let's say it's $25, it's not going to be enough. You're still going to owe more than what you've originally borrowed. So this is very, very important to understand. Compound interest can kill you. What I suggest is that you look at the terms of your credit card, that fine print that you never read when you got the credit card, that you might increase your minimum payments instead, because all you're paying for, if you're in this scenario, is just the compound interest and no principal. You want to get the principal to decrease as much as possible. So the question that everybody has, should I pay off my debt all at once? I'm going to keep you in suspense and not bring this up until after my next section. Yes, I'm holding this to the end because really what I want to discuss is savings. And something that I believe this was brought up in either Rich Dad Poor Dad or in The Millionaire Next Door is really asking yourself, where does my money go? Actually, I'm sorry. No, this is Rich Dad Poor Dad. So this is where your money goes when you get paid, when you get that paycheck. First, it goes to the government in terms of taxes, in terms of Social Security. So before it even gets to your pocket, before it even hits your bank account, it goes to the government first. Then, depending on certain folks, it goes straight to your bills, rent, electric bill, gas bill, car payment, debt, student loans that you might have, maybe a car loan, whatever the case might be. It goes to these things. And then maybe some necessities, food that you might need to buy, maybe you need to get more water, whatever the case might be. So you're paying all these things before you actually pay yourself. and you pretty much keep the leftovers if there are any leftovers. So in the examples that I've discussed, if you are accumulating wealth, you have positive cash flow, you get to keep some good amount of leftovers. However, if you're not doing that, that's when it becomes a problem. That's when you get into the rat race, where you're pretty much just a middleman. You're taking a check and splitting it up into different checks to pay other people. Recommendation is, hey, before you get your check, yes, you still have to pay your government, and then you pay yourself. And no, I'm not saying then you start spending on your shoes and you start spending on your TV and on going to the movies. That is not what I'm saying. I'm saying you prioritize your money first to go into your goals. So yes, after the first thing you should do when getting a paycheck is allocating a certain amount into your savings account for you to accumulate for that Cancun trip that you're planning, for maybe you're saving up to invest some money, maybe you're saving up money to buy a house. You want to pay yourself first. So once you get that check, maybe you have a reoccurring payment that goes directly into your savings account every month of maybe $200 a month, and that is the first thing that happens as soon as you get paid. So again, it goes into your savings. Maybe you want to start inserting this into your investments to make your asset column a little bit bigger. But you want to make sure that the second person, I guess, that you pay after you pay the man is yourself. Then you want to pay your controlled necessities. Food, whatever the case might be that you might be spending on, maybe something for your kids, those necessities. And I have on here controlled necessities. You want to ask yourself, is this really a need or a want? It has to be controlled. Next item is the bills. You pay the government, you pay yourself, you control your necessities, then you start paying your bills, and then you start paying debt, and then any leftover, any positive cash flow that you might have, you might just leave it in your bank account. You might want to reallocate some of that into your savings and pay yourself even more. You might want to spend a little bit more on paying some debt. That is a good thing to have. That's a good problem to have. When you have a lot of money left over, that's a good problem to have. Again, savings, very, very important. You not only want to know where your money is going in terms of budget, but how the money is coming down the pipeline. Now, the biggest reason that I found out as I meet with people is that they don't save because they're afraid. And I'll throw myself out there. I'll give myself as an example. I was on the same boat. I began a savings account, I want to say maybe 6-7 years ago. And I thought I was going to put some money in it. I started putting maybe $50 a month with whatever I had left over. Then I started, again, reading Rich Dad Poor Dad. I said to myself, you know what? I'm doing it wrong. I'm going to start putting more money into my savings account. That's the first thing I'm going to do. And I started to do that. I started getting a little bit more money. I had about $200, $250 in my savings account. And then something happens. Then all of a sudden I get this bill that I can't pay. I didn't get enough hours at work because I was teaching at the time. During the summer is tough. I'm just saving money to survive during the summer. So now I'm eating up into that savings account, and my plan wasn't working. I had to take money out. At the same time, I found out that I was overdrafting in my checkings account. So it just began to get a little bit more scared. So I was very cautious about having any types of savings account. I was actually just cashing checks. I wasn't even going to the bank anymore because I was going to overdraft for some reason. I start making automatic payments. I was at the time making automatic payments for my phone bill. I stopped doing that in case I didn't have money in my checkings account, so that I didn't have to overdraft. So because of all this experience, I actually had the fear of not prioritizing my savings account. And as I've been sitting with folks, I noticed they have the exact same fear that I had back then. So what I say to everyone on this webinar is, hey, you might have had a bad experience, you might have a similar experience to me, but trust me, once you get past that fear, you don't want to jeopardize your savings account. You don't want to jeopardize your future because you're afraid in the present. You don't want to do that. What you might want to do instead is maybe adjust it a little bit. Maybe during tough times, you're not allocating $100 in your savings account. Maybe because they're tough times, you're only allocating 20 bucks. But the key is to continue to allocate amounts into your savings account. So sometimes when we talk about savings account and putting money aside and being that the first thing that you do, we start to get a little scared about that. But we want to break that. We want to break that habit. I talked about this as well, a needs versus a wants assessment, particularly when it comes to saving money. You want to ask yourself, hey, are there ways that I can save money? Are there other ways to these means, or do I really have to commit to this? I have some examples here. I'm not going to tell you if it's a need or a want, but it's a need or a want to different people. So some folks, it might be a need to have a gym membership. For others, it might not. For others, they can probably find YouTube videos and exercise videos that they can just follow along on their computer, and they're just exercising at home instead of going to the gym. Preschool for your son. Maybe that's a high need for you. You want to have your son in preschool. Starbucks every morning, just like to me, going to concerts and shows is a need that it has to be in my budget. Starbucks every morning, can you cut down on Starbucks? Can you just get regular coffee and save yourself a lot of money? Think about it. Starbucks every morning. Do you really need that? Or is it something that you just want? Car payment, same thing. Do you really need a car at this time? Maybe you want to buy a second car. Maybe you want to get a car for your girlfriend. Can you take the bus? Maybe you work just blocks away from your house. Whatever the case might be, think about the car payment, because it's not just buying a car. You're also adding gas to it. You're also adding insurance to it. So there's additional costs associated with certain things that you might not even have thought about. A Netflix account. I see this all the time. Do you need a Netflix account? Do you need to go to Redbox all the time? Can you just watch free movies from Hulu, for example? There's just a lot of examples of needs and wants, and we're not going to go through all of these, but cable is one. Funny thing, I actually just got cable only for the World Cup. Last time I had cable was 4 years ago in the last World Cup, but I don't really watch TV. I just stream my shows that I want to watch on my laptop, so I don't have cable. Internet. Do you really need internet? Can you go to the library and use the internet there? Again, it's different for different people. Maybe you have 3 pairs of shoes. Maybe you want to buy 3 pairs of shoes every month. Do you really need to buy 3 pairs of shoes? I'm nobody to judge. I'm just asking these questions. You want to ask yourself these questions. Maybe 3 pairs of shoes from Payless. Maybe that's something you need your 3 pairs of shoes, but you're getting them from Payless, so you need them maybe for work. I don't know. Pair of sunglasses, anniversary celebration. Oops, sorry, I went a little bit too fast. Anniversary celebration. Is that a need? Is that a want? Hey, maybe it's tough times. You don't need that right now. You can't afford it. It's just something you really want to do. Maybe you keep it simple. Maybe you do celebrate your anniversary, but not by going all out. Maybe you just control it a little bit and do something at home or something a lot more simple. But this is just something to think about. Is it a need or a want? You have a lot to think about in this session. You have a lot to think about after this session as well. All right, so as I'm concluding this lesson today, I'm going to touch upon the question, should I pay off my debt all at once? Everybody is in a different financial situation. Some of us don't need to pay off our debt. Some of us, for some reason, might. What I found out as I sit down with folks is a lot of times the true reason people want to pay off their debt is just to have a peace of mind. That's really it. I haven't found another reason why folks want to pay off their debt. It's just so that they don't have it in their bank statement, so that they don't have to make monthly payments. However, that's not necessarily the question you should ask yourself. You should think in terms of cash flow. So think about this. Let's say you have a car loan or something, a school loan, I don't know, whatever the case might be, for $2,000, and you're thinking about paying it off. You're like, well, you know what? Next paycheck, I'm going to just pay that whole thing off and get it over with. There's a few things that I want you to consider. Number one, can you maybe increase your minimum payments instead? Maybe your minimum payments right now are $80, and yes, maybe you're only paying the compound interest. Instead of paying the $2,000, maybe don't pay $80, pay $150. I don't know, but maybe you can increase your minimum payment if you want to speed up the process of paying off your debt. Now, you don't want to increase it too much. Maybe you don't want to say, okay, I want to pay it off in 2 months, so I'm just going to pay $500 now and $500 later. My question to you is, are you really paying yourself first? Are you allotting amounts for your goals? If part of your goal is to pay it off, then and the answer is probably yes. But if your goal is a little bit different, if you're trying to save money to put more money in your asset column, put more money in your investments, in your real estate business, and whatever the case might be, that is my question to you. Is this because you're paying yourself off first, or is it because you just want to have that peace of mind? One thing you want to think about before paying off your entire debt is what amount of money do you have in hand? Because I look at the opportunity cost. I think about, man, if I pay $2,000 right now, I could have actually, instead of doing that, I could have maybe just paid $100, by increasing my minimum payments, and I have $1,900 that I can already allocate to my savings account, to my financial goals. I can speed up the process in meeting my financial goals to increase my asset column. That's the way I think about it. I think about the cash flow that I have in hand. I don't care about a peace of mind. I will eventually pay off this debt. In fact, I was so bad, and I'm sharing something a little bit too personal, I was so bad with my debt that I had things in collections. I had about 4 things in collections. I owed 2 credit cards. I can't remember the amount. It probably accrued to, I think it was probably about $8,000 or so. I actually had a company sue me. I had to settle out of court with a lawyer. I had a warrant for my arrest. Yeah, I wasn't the angel in regards to payments and debt. However, trust me, if I can get out of debt, if I can improve my financial situation, so can you. And that's something that I really want to stress. You don't have to pay off your debt all at once. You don't want to do what I did and screw up your credit. You don't want to have things in collections all the time and have a sheriff visit your home. Maybe you obviously don't want to do that. But now my credit is actually pretty good. You might not want to go that route. However, you do want to think about the opportunity cost. If I'm spending $2,000 to pay off my debt, can I use those $2,000 for something else? Can I right away increase the amount that I can have on building up my assets? Maybe one of your financial goals is to invest in the stock market, and you want to invest $5,000. Well, hey, you've already instead of paying your debt for $2,000, those $2,000 are going to be serving you a better purpose. They're going to be adding more passive income into your pocket much sooner than it will with your debt. And if you really think about this is the question that I will want you to ask yourself. Think about this. If your minimum payments are $80 because you owe $2,000 and you spend $2,000 to pay it off so you can have a peace of mind, the only amount that you're saving, the cost of your peace of mind, is really only $80 a month. That's it. It's $80 a month. You might think, oh, it's $2,000. Now I don't owe those $2,000. That's true, but you only decrease your expenses by maybe $80 a month. That's it. So these are things to really consider. Yes, or you can think about it, you only increased your cash flow by $80 a month. Whereas if maybe you're accumulating amounts to go into your asset column, it might be a little bit higher. Maybe you're investing in your real estate company. Maybe you're investing in the stock market, and you're getting cash flow, passive income of $300 a month. You'll be making a bigger impact doing that than you will just saving $85 a month, or $80 a month. Yes. So maybe I didn't answer the question. If I were to answer the question, most of the time it would be no. You shouldn't pay off your debt all at once. Okay, so just remember savings. Maybe you want to pay yourself first. So yes, you have to pay the government before you pay yourself. Then control necessities, then the bills, the debt, and then the leftovers. If you have any, that'll be a great problem to have. But you want to follow the system before you want to pay off all of your debt, before you think that there's another solution to your problem. Okay, that ends our session. I'll ask to see if there are any other questions that somebody might have for me. But I hope this was informative. I hope this was very useful for everyone. Our next stop is the cash flow game. That's our next lesson. When that will be, I'm still planning. Obviously, we have to be in person, so I'll keep in touch. I'll send out a request. Yes, we do have to be in person. We can't do this on a Google chat or a Google on air like I'm doing right now. This will have to be in person. But everything that I discussed, from savings, cash flow, paying off your debt, all of these little items that I discussed are just concepts to prepare you for the cash flow game. Okay, so we are going to talk about the cash flow game just a little bit right now. I just want to look at the questions, and then we can move on to discussing the next lesson. All right, so Q&A. Let me go through the chat box first. I don't see anything there. Q&A. Nope, I don't see anything there either. Nope, I don't see anything there. Okay, so yes, next stop, cash flow game. I'll send an invite to everyone who has already completed lesson 1 and lesson 2. Trust me, it'll be difficult if you have not taken those lessons and you're trying to commit yourself to playing cash flow. For those of you that have completed lesson 1 and lesson 2, the only recommendation I have is if you have the book Rich Dad Poor Dad, you might want to read lessons 1 through 5 before you start playing cash flow. It'll be a huge help, trust me. I have the audiobook. If you want to have access to my audiobook, please let me know. But it'll be a huge help. You'll be able to play the game more comfortably, and it'll obviously be less of a headache trying to explain all the rules of the game. Okay? Let me take one last look. Chat box is empty, or nothing new there. Q&A, nothing new there either. So I want to thank everybody for listening to me. Thank you for joining me on this webinar. Next stop is the cash flow game. Stay tuned for that. Thank you, everyone, and enjoy the rest of your night.